Good morning. Buenos dias. Bom dia. I'm Tsao, a managing director and head of our Global Gateway at Silicon Valley Bank, now a division of First Citizens Bank. A quick update, our integration with First Citizens is going really well. And as a longtime veteran of SVB, I'm really pleased to say that the bank is back supporting the innovation economy in the same ways we've done through most of our history. Speaking of history, I'm really excited to welcome you to another edition of our annual review of VC trends in Latin America at the mid-year point with our longtime partners, LAVCA. This morning, we'll hear from Carlos Ramos de la Vega, Director of Venture Capital at LAVCA, on his review of the mid-year data. We've been following the Latin American innovation ecosystem since we first traveled to Brazil in 2012, and we've seen incredible growth since that time. However, just like the rest of the global innovation economy, the market correction has seen VC deployment pull back to pre-pandemic levels and then some. We'll then go to my colleague, Nico Toro, market lead for Latin America, for a conversation with some of the leading investors in the region, our good friends, Jimena Pardo of High Ventures, Rodrigo Baer, Upload Ventures, Rafa de Haro, COMETA, and Carlos Kokron, the one and only CK from Qualcomm Ventures. I'm really excited to hear their insights on what's happening on the ground in the region. Here in the US, we've been in the doldrums since the market correction started in 2022. So that's more than 2.5 years since the correction started here. However, VC investment actually increased in the second quarter to $56 billion, according to PitchBook, which is a 51% increase over Q1, and for the first half, 20% over the same time last year. This suggests that we're moving off the bottom and we're starting to recover, but obviously it's a long way off the highs of 2021, and there's certainly still a lot of work to be done to digest all the capital that was invested during the pandemic period. The growth in investment is somewhat distorted as AI received more than 40% of total investment in the first half of the year. There are also several mega rounds which are AI related, and those weren't done by traditional VCs at all. They were mostly done by big tech companies. And that all underscores that it remains a very challenging market for fundraising at the moment. Here in the US, there are two significant events that will influence how the innovation economy recovers in the US in the fall. The latest inflation data seems like it's moderating, moving in the right direction. At the same time, there are some signs that the US economy is slowing down. So it's widely anticipated that the Fed is going to reduce interest rates at least once in the fall, perhaps twice, to preserve that that hopefully that soft landing for the US economy. The second event, of course, is the US election. And that's going to be interesting to say the least, but at a minimum provide much more certainty for investors as well. In the meanwhile, it remains a challenging time for startups with cash runway reducing for all but the strongest of startups. These market conditions could lead to a pickup in the exit environment, both in terms of M&A and the IPO window opening maybe just a little bit wider, especially if we have those long-awaited interest rate cuts. That being said, we're certainly closer to the end of this current market correction than the beginning. And with the AI revolution in full swing, we remain incredibly bullish on the medium to long-term outlook for the innovation economy. Carlos, over to you, my friend, and looking forward to hearing how Latin America compares.
Thank you so much, Andy. And it's a pleasure to be here with everyone today, albeit virtually. Good morning, good afternoon. And at least I'm Carlos Ramos de la Vega, the Director of Venture Capital for LAVCA, where I help cover what's happening in the VC asset class, what are the relationships with LPs, GPs on the ground, and indirectly with startup founders that are raising this third-party capital. And we'll go through some of the good and some of the not so good, but that it's important for us to point out as we move forward with the development of the ecosystem. So if we can go to the next slide, one of the things that I do want to point out here that I'm very excited to share is that for the first time ever, LAVCA was able to create a real-time startup directory feed fed with all of the data that we collect from our network on startups that have raised at least $1 million in VC funding since 2019. This includes not only real-time data on, of course, the companies and investors, but also their relationship with prior companies and backgrounds of experienced founders, whether a company is women-led or not, where the company is based. So, of course, I encourage everyone that's looking at this webinar and our LAVCA member investors to actually make use of this tool, because it's definitely something that we created with a lot of thought on how that could be useful to your own diligence processes. If we can go to the next slide. Let's go into the data straight. It's been 8 months, right? 8 quarters, sorry, that we've seen an average normalized run rate of investment of around $1 billion in Latin America. Before we could have said that the market was stabilizing. Right now, I think we can say for certain that we have a stable run rate in terms of VC investment. But let's actually take a second to look at the composition here, because it's also very important. It's not surprising to see that most of the capital is actually coming from seed and early stage funds and early stage rounds in the ecosystem. And that is because of 2 reasons, very obviously. The first one is because, as we all know, the ecosystem is permeated with the local funds that are early stage funds predominantly. At the same time, the global funds that have Latin dedicated pools of capital have rebalanced a little bit their allocations and their ability to invest in the region. And that is also because of what Andy was mentioning about the indirect relationship with interest rates coming out of the US. But that also has, of course, limited their capacity to support companies at the growth stage, let's say, when they're trying to scale up. It is no mystery to anyone that growth equity capital is still very limited. And it's also very, very unpredictable. We are able to predict with more certainty what's going to happen with local early stage financing than with growth stage financing. Of course, we still do not have a magic crystal ball. We would love to have one, but we don't. So that is what we can tell right now. Last thing, though, is we still see the prevalence of alternative financing and venture debt, which of course came very much in vogue in the past couple of quarters because of companies predominantly on fintech and proptech are raising additional facilities in order to be able to fuel their growth or their debt warehousing facilities as well. If we can go to the next slide, we can actually see here an interesting analysis that we started doing last year, which is what is the composition actually of both dollars and deals that are coming to Spanish-speaking Latin America? Well, each one of the major markets, but also in cumulatively in Spanish-speaking Latin America versus Brazil. And very interestingly, as we can see, again, not surprisingly, Brazil is still capturing the lion's share of the dollars, but Spanish-speaking Latin America actually accounts for around 50% of all startups actually that are raising third-party capital. Very surprisingly, for example, is the role that Uruguay has actually been playing in Spanish-speaking Latin America, as more and more ex-founding teams and ex-operating partners of the likes of Meli, Nubank, and dLocal actually start creating their own ventures. There's been a very interesting increase in talent density in Uruguay, for example, that has led the country to go from 7 startups that were VC-backed in 2020 all the way to 32 startups that were VC-backed in 2024. Of course, these are startups, as most startups right now in Latin America, that are not only thinking about local markets, they're thinking about regional markets, and some are thinking about even global markets from day one. So very much looking forward to see all of these markets continue to develop, and particularly the ones that are not the usual suspects, but are still important for the development of our regional ecosystem as a whole. If we can go to the next slide, please. This is a very interesting first-time analysis that we're actually putting together here, which is, of course, no mystery to anyone. We saw a lot of companies raising capital, of course, in 2021, 2022. And if we assume a normal period of 12 to 18 months of runway that the average startup raises for, we are about to see a very significant wall of companies. So I'd say like a wave of companies actually coming back to market in the second half of this year. Companies that are likely to come back for additional financing, which of course I would be very, very curious to hear from the investors that are here with us today, how are they planning to actually manage that process? How are they planning to either, go and focus on follow-on capital versus, like selecting new opportunities for investment in their portfolio? But at the same time, we have to recognize that these numbers can be a little bit overstated because some of these companies have already turned to profitability and might be just willing to stay with the equity partners that they had at the seed stage and early stage round without having to commit to raising a growth stage round. So, but needless to say, we definitely will see a very important slew of companies coming back to market in the next 6 months to I'd say it's 6 months to 9 months in the ecosystem. If we can go back to the next slide, please. Another piece of brand new analysis, which is also very exciting on our end, which is we began quantifying basically how hard are startups in Latin America, meaning in terms of fundraising. And what I mean by this is, what was the conversion rate from one series to the other when you're fundraising? How many startups actually make the cut for the next fundraising round? And that's how we've figured out that only 1 in 10 startups raised a subsequent Series A after raising seed capital. Only 1 in 30 raised a Series B after raising a Series A. If you actually put all these numbers together, it's not surprising to anyone that actually getting to a Series C is around 0.3% of all startups that ever raised a seed round in Latin America. That is, of course, extremely factual. Those are the cold hard numbers. But at the same time, we have to recognize that not all companies need to raise all the way to a Series D or a Series D in Latin America in order to have a successful exit via a strategic acquisition, an M&A process, or some other sort of liquidity event that can be very beneficial to both LPs, GPs, and startup founders at the very end. So definitely startups are not the easiest business to go into, for sure, but it's definitely there's room for opportunity for these metrics to actually improve in the coming months or in the coming years. If we can go to the next one, please. This one is a mapping that we did on how are the traditional tech hubs actually performing in terms of capital and the number of deals that they are actually capturing. Of course, we see the main tech hubs still leading the way in terms of innovation in Latin America. But very surprisingly, in this part of the cycle, even if it's a downturn and a downside and the down part of the cycle, the trough, we're definitely still seeing innovation coming in some of some newer cities that are able to actually attribute at least 10 deals that have raised 10 startups that have raised VC funding in the past 6 months. So that includes 3 Brazilian cities, 2 in Argentina. Oh no, 4 in Brazil, sorry, not 1 in Argentina. So Vitoria, Brasilia, Campinas, Rosario, Blumenau, all of these cities are newer in the radar in terms of their activity levels. And of course, that actually is the clear reflection that, of course, even fund managers that are just focused in some of these big cities are also extending a little bit their radar and their reach to try to see if there's high quality companies to be backed outside of the traditional centers. If we can go to the next one, please. This is another metric that we've actually done for the past 4 to 5 years already. It actually relates to the number of women-led startups that are actually being funded in the region. And unfortunately, I don't have the brightest news here. We only saw 11% of capital going to women-led startups in the region in the first half of the year. For us, a women-led startup is a company that has either a woman CEO or a woman co-founder, to be very clear. We, of course, saw a peak on this on 2021, 2022, where we saw even more than a quarter of startups having a woman founder, a woman CEO. But we really, really hope and we encourage all of the fund managers out there that have some dry powder to, of course, look at this type of opportunities. Also, needless to say, I don't have to repeat the importance of actually having or trying to attain gender parity in portfolios as well. Needless to say, of course, they still have raised more than $8 billion since 2019, which is a sizable amount. Some of them has gone to sizable mega rounds that we all have been very familiar with. But at the same time, 11% is definitely far, far from target that what we would expect for the ecosystem. Next one, please. However, this is a big however. We're very hopeful because we are still seeing good developments on this at the early stages of investment. So we actually saw an uptick in the number of deals that are getting funded that are women-led startup deals in Latin America to around 24%, so on the seed stage level. So hopefully, if these companies are able to find product market fit, are able to validate their products, validate their business scale enough, are able, hopefully we can see them raising subsequent rounds of capital at the Series A, B level, and then late stage. And hopefully that's going to help us improve the numbers a little bit. But definitely hopeful in the seed stage level, but definitely not super hopeful in Series A, Series B right now. If we want to go to the next one, please. Here, we do a similar analysis, but instead of focusing on gender diversity, we focus on how many founders that have previous experience as a founder are actually capturing capital. And of course, I think needless to say, like we are at around 49% of all capital that has been deployed in first half of 2024. And of course, that speaks a little bit to a flight to quality in terms of the fund managers that are deploying this capital. And at the same time, well, doubling down on some of the companies that already saw some big results, and maybe of course, operators that also are willing and are able to command the leadership to find an exit opportunity, or to be comfortable and sophisticated enough to be talking about like a secondary process. So we are at an all-time high in terms of backing experienced founders in Latin America, which is of course not necessarily a bad thing, because it also makes sense because of the number of founders that are now better experienced, and that this actually reflects the founders that have been able to exit their businesses in prior cycles and that are coming back to market with new ideas. So it's a sign of a maturing ecosystem, but hopefully we can also see money going into newer opportunities. The next one, please. Here again, this is on experienced founders by stage. I think I would just point your attention specifically here to early stage, because one of the conversations that we've had both with GPs and venture investors and also founders is those companies that raised a significant amount of capital at the seed stage, be it by convertible notes or safes, that are coming back to market and are right now in current conversations about pricing, terms, valuation, some things that had not been super pressing in the past, let's say 3 quarters or even 4 quarters, are coming back to those conversations. And that experience that founders have maybe allows them to actually command a higher premium, I'd say, in the way that they raise capital on the Series A and Series B level. So that is one of the reasons we could see actually this uptick on the Series A, Series B compared to seed stage founders or late stage. But definitely an interesting trend to track. If we can go to the next one, we can actually see here and be super curious to hear from CK his experience on how he's looking at corporate participation in venture investments here. We have definitely seen a rebalancing of their allocations from their balance sheets into the ecosystem, as it would be natural as part of the cycle. At the same time, we do see them commit a consistent amount of capital across the number of deals that we see in the region. We do not see corporates leading the mega rounds that we're seeing in the US, for example, that Andy was referring to, but we definitely see them co-participating with GPs in a very extensive way. One thing to point out here, though, is that a lot of corporates actually started this VC vehicles around the top of the cycle, and some of them are still trying to digest a little bit of the markdowns or the potential markdowns that they could see as part of their overall strategy before they commit additional capital into the ecosystem. So we might see a little bit of the pullback of some local corporates, medium-sized corporates, I'd say, that were interested in the asset class at the very start. But of course, we see the continuation of the likes, of course, of Qualcomm Ventures, of Vega, of Mercado Libre, actually making commitments into opportunities within the region. Here, of course, we include a list of who has been very active in the past, well, from 2023 all the way to first half of 2024. If we want to go to the next one. Here, well, I won't take a lot of time here, but this is a list of like a lot of dear friends and partners who are actually committing a lot of capital by stage at every stage. Of course, we can see that the ecosystem is basically mostly, as we know, seed stage and early stage, a lot of local funds, some late stage capital. That is, of course, the natural progression of a lot of early stage funds that are also committing those growth stage rounds. But we definitely do not see the level of global commitment in late stage rounds that we saw in the previous years, which of course is natural as part of the cycle in the ecosystem at that cleansing process overall. So thank you for this partners that are actively investing in the ecosystem. And next one, I think it's the final slide before we actually turn it to a very interesting conversation. Is this analysis stemmed from a conversation that we had with some LPs that were very interested to map what was their overall exposure into Latam VC as an asset class when VCs actually share some opportunities across their portfolio. So the way to read this is a little bit, for example, that COMETA shares 10% with Clock Tower Technology Ventures of their portfolio. This is very important to say. It's not on a round by round basis, it's on a portfolio, overall portfolio basis. So that doesn't necessarily mean that in every single round, COMETA invests 10%, 10% of every round with Clock Tower. But it is still a very high level, interesting analysis on how funds participate within the region. And whenever an LP is thinking about allocating capital into a fund, they can also think about how to diversify their opportunities and their basket, I'd say, of opportunities within Latin American VC. Of course, these are just a select number of funds, but we have additional insights and data across every firm that's investing in Latin America. So to the extent that every LAVCA members are actually interested in something like this, feel free to reach out directly, and we would be more than happy to share additional data with you on this. And I believe next one, but I believe we're done on this. And yes, we're done. So thank you for this, Andy, SVB, longstanding partners as always. Thank you for our dear investors who are able to join us today, and looking forward to a very engaging conversation. Nico, over to you to introduce our panel.
Thank you, Carlos. That was a very insightful presentation, and I for sure I'm looking forward to being able to dig in a little bit more and analyze this information. Thank you also, Andy, for the remarks you did at the beginning, and very excited to start this conversation of friends that we have here today. You know, it's VC world that we operate in. It's a small world than we'd like to admit. So with us, we have a few friends that we've known each other for quite some time. I'll start introducing myself. I'm Nicolas Toro from Bogota, Colombia. Hello, bom dia to everyone. Very proud to say that I'm the new head of SVB here for Latam. And if you hear a few noises in my background, is that there's a very big thunderstorm brewing up here in Miami. It just happened incredibly fast. It was very sunny this morning when I went out for a jog, and now it is pouring rain and thunderstorms. So hopefully we won't have any issues with my Wi-Fi today. But in order to start, I want to begin with some intros. I'm going to ask each of the panelists today to introduce themselves, their fund, and the last investment that they made that they can talk about publicly, and also to tell us about how active they've been this year in terms of total capital deployed, number of deals, new deals and follow-ons. And just to start us off, I'll give the mic first to Jimena.
Gracias, Nico, and gracias, Carlos and Andy. It's always a pleasure to be here, and an honor that you invite me. So I'm Jimena Pardo from High Ventures, early stage VC. We invest in Latin American founders solving huge problems with technology, and as you probably know, we've been obsessed with AI and the nuances of the region for this technology, and happy to spend some time with some good colleagues and friends here. So our last public investment is actually an AI pure play on the application layer that it's called Perhaps. It's a digital workspace that allows you to do your work with your own context in different LLMs, and with a lot of efficiency in this sort of canvas. This year we've done 3 different investments, newly investments, 3 follow-ons. I'm hoping to make my 4th one next week, so please just send good vibes. Everything is going well in the process.
We're sending good vibes to you and the entrepreneurs. Right, congratulations. Thank you.
Of course.
Very happy to have you here. CK, we'll hand it off to you.
Thank you. Hey guys, such a pleasure to be here and share this panel with you. Thanks for the invitation. So for us, our last investment in Brazil was a company called very early stage. Actually, typically earlier than we invest in, a company called LAVCA, which is basically trying to solve the problem of fresh food in grocery stores. So demand and supply, trying to use AI to optimize, how much the people buy and obviously sell, depending on location, time of the year, weather, etc. So they incorporate a lot of data and are basically working with grocers, like for example, in Sao Paulo, and so excited. We've known the founder for many years. I was a bet on the founder. He's assembled a great team and basically has a early version of the product that's working out and getting some feelers. So happy to support them. In general and at a global level, this has been a slower year for us than the previous year. And in part, I think it has to do with the AI craze. So we invest globally. Qualcomm Ventures invest. We have teams in US, Brazil, India, China, Europe, Israel. And in general, as you all know, the market's been obsessed with AI, which is huge. The opportunity is huge. I think we all believe the AI is actually going to be bigger than the internet, right? So if you look at the last big wave of technology that changed the world, definitely is the internet. There's been other waves, mobile, cloud, etc., that have sort of added upon it. But I think AI is bigger. The challenge is valuations are absolutely difficult to fathom, right? There's a lot of everybody's trying to paint themselves as an AI company. And so we have been investing. We have close to 8-10 companies, AI companies in our global portfolio. But we've been cautious. We've been more cautious in terms of when to get in and when not to get in. So the market has been correcting, has been noted in the slides for the last 2-3 years. I definitely think we're hitting bottom. I think we still see, we just had a deal close last week, a follow-on, which was a down round. Luckily, we had come in the form of a note in between rounds. So we got the benefit of the discount of the note. But we actually had priced the note cap above where the round closed. So what I'm trying to say is the market's still correcting. And I think we'll continue to correct. At a high level, I've been doing this for over 2 decades. I've gone through the first bubble. I've gone through the 2008, 2009 debacle.
And we're sure to get into that conversation a little bit.
Okay, sounds good.
Finish the
All right.
intros.
Okay, good.
But great to have you here. We really value your experience, and also would say that we're also here at SVB big fans of Marco Perman and LAVCA. So,
all right, great. Thank
since
you.
we're talking about Brazil, let's kick it off to Rodrigo.
So I wasn't here in 2001, but I was here for 2008. We've been we Upload is an early stage VC focused on the B2B side of the world. That we take it with a broad stroke there. A lot of what we back are Latin American companies that want to compete globally. That's been a core theme for us. So a lot of SaaS, a lot of fintech on the B2B side, and really betting on founders that have done the first cycle, have done whatever.com for Brazil or Mexico or Colombia, and now are ready and able to compete globally. So that's the big chunk of what we do.
Can you tell us about the last investment that
Sure. We did a company called Pupila AI, and what they're doing is helping large corporations which are very concerned about their brand to take the brand book and create all the marketing materials in a consistent manner. So it's an application layer on top of AI to ensure consistencies across marketing materials.
Great. Yes. We've heard of the investment.
Yeah, and then
we're going to do something interesting.
So this year we've done 1 new investment, 5 follow-ons. Hopefully we'll close the second investment this year tomorrow, if the founder signs. So if you're watching, please sign. But no, we're good there, and
Also sending you good vibes for you and the entrepreneur. Thank you. And then let's close it off with Rafa.
Thanks, Nico. First of all, thanks, Nico, Andy, at SVB, and the whole team for inviting us, and also Carlos for the insightful presentation at LAVCA. My name is Rafa de Haro. I'm a partner at COMETA. We're a venture capital firm that invests in software companies across the Spanish-speaking world since about 12 years ago. We are currently in year 3 of the investment period of our Fund 3. And to your question, Nico, I think we're about approximately 2/3 of investable capital deployed. And within that, approximately 2/3 of that has been to sort of first-time investments, and the remainder for follow-on investments. We've clearly seen or suffered through the downturn as well. We launched our fund in 2021. We tend to avoid hype cycles. So the business plan was to do 8-9 investments per annum. We ended up doing 4 only because everything was just so out of whack. 22 was an interesting year because the correction started. You still had some companies in the market, and then a little bit of an adjustment in rationality, so to speak. And so we did, I think, 10 investments. And then our last investment, which was our only new investment last year, is called Pulsar. That is a company based out of Palo Alto, California, but it's founded by Chileans, and 80% of its business is actually in Mexico. They have some business in Chile and Colombia, and they have a growing business in the US. This is an industry 4.0 SaaS solution for, I'd say, broadly the manufacturing industry. Mostly helps factory managers optimize the machinery in their plants. So very, very interesting play that's on tailwinds around nearshoring AI and all of those. I think that's it, right?
Yeah, very interesting. We've also worked with Pulsar. It's definitely a very interesting application that they're building. So one of the common words that came across and something that we were talking right before we started the panel was cycles, and there were 2 numbers thrown out: the year 2001 and the year 2041. So I'll let Carlos start off with your learnings and your lessons that we can apply to Latam from those cycles that you've seen, beginning with 2001. And then I'd like for Rodrigo to close it off, telling us about why he's talking about the year 2041. So off to you, CK.
Wow, 2041. That's interesting. I want to learn more about that. Somebody said about crystal ball, but we got it. So look, I think we have to just always take a long-term view in this industry, right? If you look at the industry where it is today, where it was 10 years ago, don't even have to go back 20 years. It's just phenomenal transformation, right? The quality of the entire ecosystem, the maturity. Again, we had slides that talked about number of repeat entrepreneurs, number of female entrepreneurs, right? Everything is trending up. It's easy to get sort of worried about the short terms up and downs, but this is largely definitely the trends are up and upwards. So very exciting to see. Again, you see these cycles. I think it's important not to get, and Rafa mentioned that, I think discipline is important, right? So it's not because you have capital that you have to deploy at any cost. I think that discipline is important. And at the same time, for entrepreneurs, you always have to strike a balance between growth and efficiency, right? I think the days of free capital, 0 interest rates are gone. I don't think they're coming back anytime soon. So we did go through a period of almost 15 years of, essentially very, very, very low interest rates. And we kind of got used to that and thought that that was going to be like that forever, myself included. But, definitely it's not the case. And so you need to grow as startups, obviously, but you need to be efficient, and striking that balance, I think, is the thing to do going forward, right? don't invest at any cost, but you have to keep investing. You have to, you have to show to investors that you have the opportunity to grow, fast. And so I think that's what's key. But again, I definitely positive. Yes, there's a big correction. What I'd say is 2021, really leading up to 2021. So 19, 20, 21 were absolutely crazy, abnormal years on a global basis, more so even in Latin America, because we weren't used to this kind of, frothiness in the market. I've been doing this again for a long time. Never in my mind I imagined that we would get to the numbers that we are today. So I think, again, just looking long term, we're at a very healthy place, and excited to see all the transformation that's been happening and the maturity of the ecosystem. So I'll stop here. I want to learn more about 2041.
Rodrigo, tell us about 2041.
So no, if it's 2041 or 2051, I don't know. But fact is, the part is not coming back anytime soon, right? First one was 2020. It was 2001, then 2021. There is one memory aspect to it, right? For a generation of venture capitalists takes 7 years or 10 years, right? And everybody that got into the ecosystem after 2008 in the US has never seen a correction. People do forget these things do happen, right? So at some point, the next generation will not have lived to 2021, and then we'll make the same mistakes. People do forget that people become excessively optimistic. When that's going to happen, I don't know. I'll tell you, it's not in the next 5 years, because we all lived through this, and we'll remember, right? But at some point, you change generation. So people are back to really caring about building businesses that make sense, and not only investing because somebody else is going to invest on the next round at a higher valuation. And that's the easiest way for a venture capitalist to look smart in the short term, is optimizing for the next fundraising, right? For 3 years, you're a genius, right? I do the seed at a $10 million valuation. Somebody writes a Series A at 50. Wow, 5x in 3 years, I'm bloody genius. And then you have to live with these companies until you exit. And to me, that's the proof in the pudding. That's what we're gonna see in the coming years, is how do we actually exit these companies, who actually makes real money once the money is returned to LPs. And that's up for a verdict there.
Okay. Anyone would like to chip in, Jimena or Rafa? Okay, so then one of the numbers that Carlos alluded to that I found very interesting was that 1 out of 10 startups that have raised a seed then raised a Series A, while 1 out of 30 that have raised a seed then raised a Series B. And I wanted to, listen from you if you found this to be true within the funds that you've that you've deployed, and how, if this is also what you see internationally. Maybe CK can chip it into this. Is this only a Latam issue, or is this the same comparable with the last few years across the globe? And what lessons we can learn from those markets based on these startling figures.
So
Go ahead.
All right, there you go.
no, we actually ran this numbers.
I mean, I think.
Well, I did actually run these numbers in 2020, and the average graduation rate from seed to Series A in Brazil was 18%, which is lower than the same cohort in the US, which was at 26%. So there is bigger breakage. A big chunk of the 10% is because people went crazy in 2021, and everybody and their mother was writing a seed check. A lot of people that have absolutely no experience in the venture ecosystem wrote checks. So there was a bunch of seed deals that were done that honestly don't deserve.
More anecdotally, Nico, in our portfolio, I think Rodrigo's right. If you had companies that were seeded, say, in 2019, 20, because of that hype cycle, the shorter timeframes in 2021 and the beginning of 2022, I think, are not. Today, that there's a massive correction, as CK and everyone has sort of stated. In our portfolio, we've seen, for instance, this year, we've made 15 investments on Fund 3. This is a 21 vintage. And this year, we closed 2 large Series A's for 2 of our portfolio companies that had raised seed rounds prior, led by us. The A's were led by outside investors. And then we closed, I think, the largest Series B round in one of our portfolio companies, the largest Series B round in Latin America so far this year. However, that sounds like a good news. We have approximately 4 or 5 companies in the portfolio where we led the seed rounds that I think in 21 they would have raised the Series A in a matter of weeks, and now they're, if not struggling, they're taking way longer to do so. And these are assets that have, I wouldn't say necessarily profitability, but they have very, very strong metrics that by any measure, I think in any market they would raise A's. I think even those assets in the US today would raise the Series A without a problem. And so that speaks to the situation globally, but specifically to the situation in Latin America, I would say.
CK, would you like to add an international perspective on how you're comparing this? Maybe
I think Rodrigo nailed it. I think the graduation rates are higher in the US. And in general, I was actually surprised to see that, but I think it's very specific to the vintage that we are sitting in, right? 2021 was out of whack. Good news is, again, the industry got a lot of attention. A lot of people sort of, it became like a day-to-day conversation. I think there's maybe some positive effects there, right? That the asset class exists, that the entrepreneurs, etc. But I think specifically, again, is a tough vintage, if you say. In general, it's higher. For us, we are mostly a Series A, Series B, Series C investor. We actually stage agnostic. We do seed investments like Anavita, and we do on occasion Series D, Series E investments. But the vast majority of our dollars and deal activity is in ABC. So for our portfolio, own portfolio, again, those breakage numbers sounded high, but I do believe that, again, as the market in Brazil, Latam continues to mature, right, those numbers, I think, with time will look better. And I think, again, the way Rodrigo put it is very good. Some of these just don't deserve to be there, right? So, again, it's part of the learning, nothing wrong, but it's sometimes that learning is painful for the investor and for the entrepreneurs.
And going back to Carlos' information and data points, he informed us that from the research, around 57% of the investments were made in early stage. I see it also across my conversation with entrepreneurs, and would love to deep dive into the return of later stage rounds, and what are the expectations for the growth of later stage rounds, and with that, how are valuations, step-ups readjusting in this new market, and what you're seeing and what is their average time between the rounds for different stages. And I'd love Jimena to start tackling this one to see what you're seeing in that field, for the investments that you've already made that are starting to fundraise.
Sure, Nico. Thank you. And I think it relates with the previous question. And it sounds very obvious, but sometimes it isn't. When the ball is up, you have to sell. And when you're in the valley, you have to invest. So what we're seeing, and I bet my colleagues and I would like to know more about their firsthand experience, but we're seeing in each stage a very good opportunity to come in, specifically in first checks and other follow-ons. In the pre-seed, we have this new technology shift going on that is allowing companies to build faster and get to product adoption faster. Specifically for Latin America, we haven't seen that hype yet that maybe CK has seen in Silicon Valley with AI. So it's a good opportunity for investors to expose capital to this new technology without the hype and high valuations. Pre-seeds and seed valuations are half of what it used to be on 2021. So the correction has happened. And the other thing that we're seeing is that the geographical marginal discount, unfortunately for the founders, but good for the investors, is back. So an AI company in Latin America is not as high valuated as an AI company in other parts of the world, specifically Silicon Valley. And then later on, and as Rafa mentioned, in later stages, we've seen amazing talent that took the hard decisions timely, and they made corrections within their companies, and they closed lines of business that were not being profitable, and they made layoffs, and they closed geographies, etc., in order to position themselves maybe in early 2022 to last this winter. And so we're seeing those Series A, Series B companies coming in with great margins, almost all of them with a clear path to profitability and a clear path of adoption. So it truly makes sense to support these companies and this talent. So, for example, the company that we're evaluating right now, it's a beautiful opportunity to come into a later stage with a very good valuation and a good way to and a good entry point. So maybe if we see all the reports, it sounds a little bit of darkish. Yesterday I was reading that we're in an all-time high of startup failure, 60%, something like that. And then we're seeing that probably rounds are being 1/4 down rounds. But at the end, if you come to think of it, it's okay. Unfortunately, it's very hard on the founders, very, very harsh. I've been there myself. It's ugly, it's tough. But at the end, for capital efficiency, it's the best time to put up money in. So would like to share, to know the opinions of my colleagues.
No, so I think it depends on the stage, right? Series A today, there is a vacuum because a lot of the Series A funds haven't been able to raise since 2021. So what they did is everybody moved to seed, because then I take a Series A check and I slice in 4 and I keep myself active doing seed checks. So the seed prices actually held better than the Series A. There are very few Series A happening in Brazil specifically, but across Latam also. On the Series B side, there is no capital in Latam, right? There was never a fund that writes the $15 to $25 million check in Latam. That was always foreign capital coming in. Now you start to see people trying to form funds. Marcelo with Bicycle, we have our own growth stage fund being raised to tap that hole in the market, but there is a big hole there. And then when you get to the $50 million range, then you're looking at global markets, and the same guys that were playing here before are still playing there. So if you survive the 5 to 10, the 15 to 25, then there is hope at the $50 million range. And honestly, I don't think it's going to get better on the Series A side until the funds raise, right? We were running the numbers the other day. There are at least 9 Series A funds in Brazil out in the market today to raise. And they won't be able to raise until there are exits, until the IPO market and the exit markets open up. And that's, we're talking about a year after it opens up. It hasn't started opening up yet. So I think we're in for a very long time of scarcity of capital in Latam.
Just quick note. I think there's an exception. I agree with Jimena and Rodrigo. There is an exception of a small sliver of very capable founders with high quality companies. I wouldn't say that by any measure we're back to 21, but I looked at the data from the US in terms of the median valuations of pre-seed, seed, Series A. And there are some companies that don't have that spread toward, like, from US to emerging market. That might be the top companies or certain very high quality companies that are highly competed, but there's still that sliver of founders that are raising more or less at the same valuation ranges that in the United States, which I think is very interesting. I think it drives the message home in terms of there's probably less volume, but there's a segment of companies that are very high quality, way higher than they were last year or back in 21 or 2019. And so that gives you some parity with the United States when it comes to valuations in those minorities, which is, I think, a good data point just to keep in mind.
So on a relative basis, you're paying a quality premium for those, right? Which is usually what happens, right? Yeah. On a global basis, again, I think in general, again, as I mentioned earlier, my view is we're coming to the tail end of correction, but over the past 2 years, two plus years, the first place where you first see the impact is later stage, right? Because that's the closest to the public markets. And so a lot of transactions in the later stage were very slow to happen. Everybody was trying to make do with the money that they had. Those are now coming back, starting to come back to the market. And like I said, in many cases, you see a down round. But they try to, I'm not going to say procrastinate is the wrong word, but they try to put it off as much as possible. I think that's the right way to say it. And then obviously on the early stage, seed stage, that's sort of usually a new zero start, a new start. So it's easier to basically say, I'm starting with a blank sheet of paper, this is where I'm gonna price it. Again, with the exception of AI. AI has been crazy, absolutely crazy. It is not unusual for you to have a couple of, researchers with some papers in the space starting companies at the seed round, raising, $20 million at a $100 million valuation, right? This is like pre-product, pre-everything at this crazy valuation. So you have to believe at this point that these companies will become unicorns, right? Because I don't think anybody's in this game to come in at 100 million to have a 200 million, $300 million exit, right? And so that's why I said early in the conversation, we have been more slow because it's just difficult to sort of play this game. Some funds are indexing the market and investing in everybody. Some larger funds are doing it and just basically investing in everybody and trying to pick the winners that way, which is fair game, right? If you're able to do it, I think it's fair game, but not how we play the game.
That's very interesting. This conversation leads me to two different questions. We only have a certain amount of time, but the two buckets that I want to deep dive in are one, AI. So I'm going to leave that for last to end on a positive note. But before that, I want to tackle the exits question that CK was alluding to, and would love to hear your perspective from what the current status of exits is in Latam. How can Latam really grow its M&A and deal-making market, to produce more liquidity events, and what you've learned, some of the common characteristics of exits and M&A that have occurred, in the past 2 to 3 years. And also, if you can, we can discuss how long the typical timelines for LOI to final contracts are. And I'd love for Rodrigo to start us off, since Brazil usually has some interesting exits. We had Pismo and a couple other ones.
Yeah, so my take on this is that for you to have exits, there needs to be a buyer. And that sounds pretty obvious, right? But it isn't. There are very few markets in Latam where you have billion-dollar companies, especially companies that are big enough to write $1 billion check, right? If you're looking at mining, yes. If you're looking at the healthcare operator, yes. At banks, yes. But basically, it ends there, right? Very few markets will have people that can write $1 billion check and acquire those companies. And going to the public markets is also not a very good answer because there isn't coverage on tech in Latam. And we're very biased, right? That's why more than half of our portfolio needs to compete globally, because there is no point. And we've seen this, right? RD, amazing company that we built, ended up being a okay exit because there was one buyer, which was TOTUS, right? Which in itself trades at 4 or 5 times ARR. So how much can it actually pay for an acquisition? Not much more than that. So I would be very concerned as a founder of going into a market where my reference company is $300-400 million, because guess what? They can write a $40 million check, a $50 million check, and that probably is not enough to return a decent sized venture capital fund. So honestly, you have to think about where you're going to exit those companies. Who are the possible buyers, and are they large enough to actually write that check?
Our view has evolved. I agree with what Rodrigo is saying. I'd love to hear both CK's and Rodrigo that have been through longer cycles on this. But when we started out, 10, 12 years ago, we kind of foresee as an early stage investor that you could see the exits being, from secondary led opportunities to M&A strategics, and then IPO was just this mirage, right? And that was the case for a while. In fact, all of our successful exits, I might say, because we've had M&A not so successful, have been around secondary led opportunities, which I think is normal for an early stage VC. But what we changed our mind on is, I think we're at a point, and we're seeing this with the large startups in Mexico, where corporates and strategics just didn't move as fast as we'd expect. And I think there's a higher feasibility that those exceptional companies would see liquidity in the public markets more so than just being bought off by a strategic. So that was a big insight for us. And then the second one that probably CK and Rodrigo have a lot more experience in, because they've been through cycles, is LP secondary opportunities. So there's the one that you sell your position in a company, and then there are this global secondary funds who are reviewing portfolios that are vintages, say, for anywhere from, I'd say, 2012 to 2017. And right now, for instance, our fund 2, we're about in year 9 of the vintage, and we have several of those processes running. And I understand that a lot of firms are actually being tapped by these secondary-led investors to acquire their portfolio. So I think that would be more of a liquidity opportunity for a lot of us early stage investors, more so than M&A with corporates and strategics that, at least in Spanish-speaking Latam, still have a lot of catching up to do, I would say.
Yeah, it's definitely a lot of to distill there. And I'd love to continue the conversation. And definitely there's a lot of material to do so in other webinars, but I want to have one last issue that is probably one of the most exciting conversations we're having these past couple years, which is around AI, and does Latam have what it takes to be a significant player in the AI space? And for that, I'd like to give it to Jimena to inspire us.
Gracias, Nico. This is something I remember I spoke to CK on LAVCA Summit last year. That is, no matter where you're building a company, it's either Sao Paulo, Mexico City, or Palo Alto, you must be using AI in order to stay relevant. If you're building tech, you need to be using AI. And truth is that if we set a pin on the map in Latin America, we're not building hardware, we're not building the fundamental models, but we have a huge, unique value proposition for the application layer. And there are some nuances that gives us this advantage and this moat for our region. Something CK and I discussed was about data. Data, unlike the US and other parts of the world, is unstructured and is basically a gold mine awaiting to be minted for Latin America. And there are some beautiful companies and a lot of talent building into that. And I mean, it's either like a Quona for COMETA or a Sensai for High Ventures, where they're actually leveraging big corporate data in order to help them sell more, as easy as that. And there's other nuances, as in generative AI launches in a conversational platform, and half of our population joined the internet through conversational app that is basically WhatsApp. So the amount of solutions that we will be able to place into the non-tech sophisticated will be amazing in the next couple of years. I know we're out of time and would like to hear the opinions of my other colleagues. So thank you, Nico, for the question.
Yeah, unfortunately, we're a little bit over time, but we are happy to hear all the opinions and have a great conversation during LAVCA week in New York coming up. We'll hopefully see you there. And what I leave with is, I always like this message, which is today is still the best day to start building something new. Just now it's even better to build it with AI. Thank you so much to Carlos for the invaluable information and data points that you shared today, and for Jimena, Rodrigo, Rafa, and CK for joining us today. Hopefully see you very soon.